5 ways to reduce your closing costs on this episode of Major Money Matters. All right, welcome back. So this time we're going to talk about 5 ways to reduce your closing costs. So there are many situations or many loan products where you might be doing down payment assistance, or you might be doing, a VA loan or a USDA loan where you have no down payment. Even if you're doing a conventional loan where you're putting down a down payment, or a FHA loan, where you are putting down a down payment, you may say, hey, I got the money for a down payment, but how do I structure this where I don't have to pay a large amount for closing costs? Now, closing costs varies. It varies depending on what city and county you're purchasing in. It varies based on your interest rate. It varies based on the time of month that you are closing on your home. And I'll talk a little bit more about that. But these are some things that you can kind of vary and manipulate in order to reduce your closing costs so you have not as much money out of pocket when you're getting into a home. So number one, first way to reduce your closing costs is obvious: seller concessions. Okay, so if the seller gives you a credit or the seller is giving you money towards your closing costs, obviously that means less money out of your pocket for you. Closing costs is something that somebody has to pay. It doesn't necessarily mean that you have to pay it. So seller concessions is a quick and easy one. If you're getting money from the seller to cover all or part of your closing costs, it really could help you out with your closing costs and not have you spend as much money out of pocket. Keep in mind, that's very relative and dependent upon the property and the seller, the desperation of the seller. Obviously, if you have a more motivated seller, then you're going to be able to get money, but that's something you can do. Seller concessions could help you reduce your closing costs. Number 2, a lender credit. Okay, if you're getting a lender credit, which means that most times you're taking a slightly higher interest rate above the par rate. Now, in this environment right now, this video is being recorded in October of 2023. So if you're in this environment, you're not getting a lot of lender credit for taking a higher rate. It's just where the market is. There's not the yield spread there in order to give you a big lender credit, but I do like to make timeless videos. So getting a lender credit is another method or another step that can help you reduce the amount of money that you are paying out of pocket. But keep in mind, you are taking a slightly higher monthly payment in order to get that lender credit back to you. Okay. Number three on how to reduce your closing costs is to close at the end of the month. Okay. If you close on the 30th, 28th, 29th, the closer you get to the end of the month, the lower your closing cost is actually going to be, for one very important reason. Now, when you were renting a place and you paid rent, when you made your payment on the 1st of the month, you were paying to stay in that home or stay in that apartment for the entire month. So rents are paid in advance. Mortgages are paid in arrears. Therefore, when you make your payment on the 1st of the month, you're actually paying the interest from the previous month. Okay, so let me tell you how this is calculated when you're closing on your home. Let's say that you close on the 1st of the month. Okay, if you close on the 1st of the month, then you are paying 30 days of interest as a part of your closing costs. So you're paying those 30 days of interest as a part of your closing costs, and then you're going to quote unquote skip 2 months and before you have to make a payment. Technically, you don't skip months before you got to make a payment. That money is being, you're going to pay for it sooner or later, one way or another. It's either pay me now or pay me later, but you're going to have to pay the interest for the time that you own the home. So if you close on the 1st of the month, you're going to pay 30 days of interest, and then you're going to skip that first month of monthly payments, and then you're going to pay during that second month of monthly payments, but you're actually paying the interest from the previous month. Okay. Now, if you happen to close on the 31st or the 30th of the month, then you have like 1 or 2 days of interest to pay, but 31 days later, your monthly payment is going to be due. Because if you sign at the very end of the month, let's say you sign on the 30th of September, your monthly payment is going to be due in November 1st. All right. So if you do it that way, your closing cost is lower, but that first monthly payment comes faster. Okay. So if you want to reduce your closing costs, Then you close at the end of the month, but you have to understand that monthly payment is going to come faster. If you close at the beginning of the month or you go a full 2 months without making a monthly payment, understand your closing cost is going to be a bit higher. Number 4 is interest credit. Okay. Now, keep in mind what I said previously when I was talking about, when you close on your home, you pay that entire month of interest if you close on the first of the month as a part of your closing costs. You can roll into the next month and say close in the first 7 days of the month. Some lenders do allow you to do this. All lenders do not allow you to do this. But if you do close within those first 6 or 7 days of the month, and you're going to make your first monthly payment 23 days later, on that first of the next month, you can do what we call an interest credit, where you're basically making the agreement that, hey, I'm going to make that monthly payment 23, 24 days later, but my closing cost is going to be lower. And this is something for your realtors to understand also when you're structuring, your closing timelines and everything. If your buyer is short on closing costs, say, hey, look, I'm gonna get you into this place, but your first monthly payment is gonna be due, that 23, 24 days later, and you help reduce their closing costs by doing what we call interest credit. But you have to understand your monthly payment is gonna be coming up really, really, really soon. Final way to reduce your closing costs is to do what we call waive escrows. Okay. Now, when you have an escrow account, now be sure to go take a look at my video where I talk about what are escrows. If this is the first time you're hearing about this, go take a look at that video and then come back and listen to this point, and it'll make a lot more sense. But if you waive escrows, meaning that the escrows are not going to be collected as a part of the mortgage. Escrows are usually taxes and insurance. They're added into your monthly payment. There are some situations where you don't have to add that into your monthly payment. Depends on the lender who's going to have your loan or who's processing your loan. This could be because of if your DTI or your credit score is too low, they might not allow you to waive escrows. Depending on your loan type, they also might not allow you to waive escrows. However, if they do allow you to waive escrows, then you are not collecting all of those taxes so that they have to make that monthly payment or make that tax payment for you or make that homeowner's insurance payment for you. They are not collecting that. And if they're not collecting that up front and you understand that you're going to pay those taxes and insurance by yourself or on your own, then you can waive escrows and your closing costs be less because the lender isn't collecting 3, 4, 5 months of taxes and insurance for them to be able to pay that out or build up your escrow account. So if you waive escrows, then your closing costs will be significantly lower, but be sure you check with your lender or be sure to talk with me and my team to make sure you actually can do that, because there are some caveats and situations where you cannot waive escrows, okay? All right, so that's it. 5 things to consider, things to talk to your loan officer about, things to give you understanding about. Hope you understand the why behind the what. Okay, we want to reduce your monthly. We also want to reduce your cash flow out of pocket while you're getting into your home. So these are 5 quick ways to reduce your closing costs and your cash out of pocket. So see you next time on Major Money Matters.